Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 15th of September 2018 and we're providing our gold and silver weekly update for the week ending the 14th of September. Gold fell $2 last week from $1,196 to $1,194, having hit a high of $1,212 and a low of $1,188. In sterling terms, gold finished the week at £913, down £12, and in euros it closed at €1,027, down €8 on the week. Silver fell 7 cents, from $14.14 to $14.07, having hit a high of $14.34 and a low of $13.97. In sterling terms it closed at £10.77, that's down 18 pence. And in euros it closed at 12.11 euros, that's down 0.13 euros. The gold to silver ratio rose yet again, from 84.58 to 1 to 84.86 to 1. The Dow Jones closed on Friday at 26,154, up 8 points on the day and up 238 points on the week. And the Nasdaq closed at 8,010, down 3 points on the day, but up 108 points on the week. Brent crude rose $1.26 from $76.83 to $78.09, and US light crude rose $1.24 from $67.75 to $68.99. The dollar index stands at 94.92, that's down 0.44 on the week. Gold vacillated within a $24 range last week, with most of the positive action happening on Wednesday. We ended last week's video with a comment, quote, "Most, however, anticipate a small bounce back this coming week, though we suspect prices will again be range-bound and potentially slightly weaker," unquote, which is how the week played out. Retail sales figures were weaker than anticipated, but industrial production was much stronger. So these statistics tended to balance each other in terms of its effect on the dollar and the price of gold. When gold rose to and peaked on Thursday at $1,212, many commentators, including one or two of our subscribers, inferred that we were wrong. Well, it's now back well below $1,200 and will ultimately continue downwards. Just imagine, we're in the middle of the Indian love trade, a month that traditionally sees gold prices rise, and it is struggling to gain positive momentum. That alone should cause some reason for concern about the current positivity of gold prices. We smiled last week as we followed a few chartists who on Monday and Tuesday said gold is going to fall further. Then on Wednesday and Thursday stated, nope, it's going to go higher. And then yesterday said, gold could actually go lower from here. If we followed the advice of some of these people, we would go broke in a month, especially if we were day trading. It's amazing how some of these so-called credible sources just seem to blow with the wind. And this is why just following charts alone is such a dangerous occupation. Yes, they have their place, but be skeptical of those who base their entire forecasts and predictions on them, as they will surely lead you to financial ruin, unless you have incredibly deep pockets. Now let's look at silver. We saw silver dip briefly below that psychological resistive floor $14 and then rebounded again all the way up to $14.34 on Thursday. And boy, did our haters come out in force, criticizing our silver price prediction. Well, to put this into context, last week's report we stated, quote, "We have to admit that precious metals have taken a small pounding these past 5 weeks, and a small correction is due. However, we can see little immediately ahead of us that will weaken the US dollar, especially with the emerging market turmoil causing investors to invest in the US dollar and evacuate their own currencies. And therefore, we are still likely to see a stronger dollar and therefore weaker gold and silver prices towards the end of this month, regardless of any slight recoveries we may see over the next few days," unquote. Then on Tuesday we produced another video with the headline, quote, "Silver falls below $14 and may go to $13.50 soon," unquote. The important word to note is soon. Unlike some chartists, we do not change our mind with every single move in the marketplace. We still hold to that prediction, and after obtaining a lot of criticism on Thursday, it was interesting to see silver fall again on Friday to a level of 7 cents lower than it began the week. Okay, it's not below $14 again, yet, but it's not the end of the month either. So to those few who gave us some jibes, we just say follow our track record. We won't always be right with our timings, but often we are. If we were in the paper trade business, we'd be selling subscriptions for hundreds of dollars a month, and our subscribers would think it cheap. But we're not, and they don't. So, our view is still that the dollar is the main determinant of prices. Although it hasn't gone unnoticed that the dollar index did weaken this week, and precious metal prices also weakened, which is another red flag. We are closely watching the Euro-USD pair and the US dollar index live charts. The euro should not be underestimated, as it forms a large part of that basket of currencies that influence international currency and commodity movements. This interrelationship between what we loosely call world currencies is extremely important and will be discussed in depth within the Inner Sanctum Banking and Economics area. So what news is likely to affect gold and silver prices this coming week? Well, on Tuesday, we have the Home Builders Index for September. Wednesday, Q2 current account deficit. Thursday, existing home sales for August. And Friday, the Market Manufacturing and Services Flash PMI for September. So important but not radical data to strongly affect the markets, though the PMI data on Friday will give us another useful indication of how well the manufacturing and services part of the economy is running. This coming week, we again see gold and silver range-bound, and frankly, they should be modestly positive. However, again, a further dollar strengthening will dampen any rise and may even push prices lower. Trump's announcement yesterday giving the go-ahead for further China sanctions has impacted the markets, but our contacts suggest that this impact is more likely to be positive short-term than negative. However, all eyes will be on the Fed's press conference at 2 p.m. on the 26th of September, when we hear about interest rate changes, and the run-up to that date will, in our opinion, have a more profound effect on gold and silver prices. Last Thursday, Mario Draghi, the president of the European Central Bank, said at a press conference in Frankfurt, quote, "Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at their present levels at least through the summer of 2019, and in any case for as long as necessary, to ensure the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Regarding non-standard monetary policy measures, we will continue to make net purchases under the Asset Purchase Programme, APP, at the current monthly pace of 30 billion euros until the end of this month. After September 2018, we will reduce the monthly pace of the net asset purchases to 15 billion euros until the end of December 2018. And we anticipate that, subject to incoming data confirming our medium-term inflation outlook, we will then end net purchases. We intend to reinvest the principal payments from maturing securities purchased under the APP for an extended period of time after the end of our net asset purchases, and in any case for as long as is necessary to maintain favourable liquidity conditions and an ample degree of monetary accommodation." Unquote. He then further adds, quote, the risks surrounding the euro area growth outlook can still be assessed as broadly balanced. At the same time, risks relating to rising protectionism, vulnerabilities in emerging markets, and financial market volatility have gained more prominence recently." End quote. So why do we mention this? Well, we shall see in the coming months an attempt by Europe to gain the economic high ground. Our contacts suggest major movements in the realignment of currencies and a reduction in US hegemony. The dollar will be king for a while yet, but with Eastern markets attempting to de-dollarize, Europe increasing its prominence, the writing is on the wall. But short term, like it or not, it still reigns supreme, and we cannot ignore that fact. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.